All right, get ready, because today we're taking a deep dive into the world of Indian electronics manufacturing.
With Elin Electronics Ltd's Q2 FY25 results.
Yeah, we've got their investor presentation and financial statements right here with us.
Ready to break it all down.
Now, Elin is a pretty big name in this industry.
Manufacturing everything from fans.
To blenders.
But what makes this deep dive so interesting?
Because they're actually showing growth in a pretty challenging market.
Yeah, it's like they're defying the odds.
So they reported an 11% year-over-year revenue increase.
Reaching INR 3,071 million.
And the investor presentation breaks down how they did it.
It's like a strategic playbook.
While their lighting and fan segments struggled a bit.
They saw real success with motors and small appliances.
Things like blenders and irons.
Everyday essentials.
Now, we have to talk about losing that exclusivity deal with Signify.
Formerly Philips Lighting.
That must have been a big hit.
It definitely impacted their lighting segment.
But Elin isn't just sitting around.
They're actively hunting for new customers to replace that business.
Love that proactive approach.
And they're not putting all their eggs in one basket either.
Right. Their non-EMS business is growing.
Things like precision components and medical cartridges.
It's like a hidden gem in their portfolio.
Diversification is key in any business.
So we see a company that's resilient,
Adaptable.
and ready to take on new challenges.
But revenue is just one piece of the puzzle.
Absolutely. We need to talk about profitability.
Well, their EBITDA increased by 15% year over year.
To INR 113 million.
Which is positive.
But the investor presentation mentions increasing material costs.
Yeah, that's a common challenge right now.
It's impacting businesses everywhere.
The RMC to sales ratio went up.
Meaning a bigger chunk of their revenue is going toward those raw materials.
Exactly.
And then there's this mention of non-cash ESOP provisions for senior management.
Ah, yes, that's their employee stock ownership plan.
Can you explain that in simple terms?
They're setting aside some company shares for their top executives as part of their compensation.
So it's an investment in their team.
Which can benefit the company long term.
But it also affects their short-term profitability.
Right, it's an expense.
It seems like Elin is thinking long-term.
Balancing those short-term profits with moves that should strengthen their future position.
Now, the investor presentation also highlights some challenges.
Particularly in the lighting market.
It sounds like that market is facing weak demand and price erosion.
Not an easy environment.
And they're also facing capacity utilization issues with small appliances.
Meaning they have room to increase production if demand picks up.
But Elin is tackling these challenges head-on.
They're aggressively looking for new customers.
Especially to replace the business they lost with Signify.
And they're expanding their product range.
Introducing things like trimmers, kettles, and radiators.
Showing they're not just reacting.
But anticipating future trends.
So they're expanding.
And developing new products.
Which requires serious cash flow.
Well, looking at their financials, their strong financial position stands out.
They have a net cash of INR 984 million.
That's impressive.
It gives them the resources to invest and navigate those challenges we just discussed.
And they're definitely putting that cash to work.
They're investing INR 183 million in capital expenditures this quarter.
Including a new facility in Ghaziabad.
Which will focus on those high-growth products.
Oil-filled radiators, OTGs, and TPW fans.
They're putting their money where their growth strategy is.
They're also investing in tooling for new products and paying down debt.
Strengthening their financial foundation.
So it's all about building and strengthening.
Investing in their future while also ensuring financial stability.
Now, looking ahead, the investor presentation paints a picture of growth.
Diversification into new products, strategic partnerships, and continued investment.
It seems like they have a clear vision for the future.
They haven't given specific financial guidance for the second half of FY25 yet.
But their actions speak volumes about their confidence.
It's inspiring to see a company embracing challenges and actively shaping their future.
We've covered a lot.
There are some key themes emerging from Elin's Q2 performance.
Why don't we give our listeners a moment to process all of this?
And then we'll come back and discuss the big takeaways and what this all means for the electronics manufacturing industry.
Sounds good.
So, what's standing out to you so far?
I'm impressed with Elin's resilience in this challenging market.
Me too.
They're not just surviving, they're actively looking for growth opportunities.
Absolutely.
And that diversification strategy seems to be key.
Both in terms of products and partnerships.
And their strong financial position gives them the resources to make these moves.
That healthy net cash position is definitely a strength.
It's like they're building a solid foundation
for sustainable growth.
And I find their focus on those high-growth products really interesting.
The oil-filled radiators, OTGs, and TPW fans.
This suggests they're anticipating future trends.
And making strategic bets on where they see the most potential.
It'll be interesting to see how those bets play out.
Absolutely.
Let's dive into that after a quick break.
Sounds good.
We'll be right back to explore the bigger picture.
And what Elin's performance tells us about the trends shaping electronics manufacturing.
Stay tuned. All right, welcome back.
So before the break, we were looking at Elin's Q2 performance.
Unpacking all their strategic moves.
Now I want to zoom out a bit.
And look at the bigger picture.
What does this story tell us about electronics manufacturing as a whole?
Yeah, what kind of trends are we seeing here?
Well, Elin's story actually reflects several big trends in the industry.
Starting with their emphasis on diversification.
Not just in products, but also in partnerships.
Right, they're building a more resilient business model.
One that can handle those market ups and downs.
Kind of like a ship with multiple sails.
Able to adjust to those changing winds.
And their focus on strategic partnerships.
Especially after losing that exclusivity with Signify.
Really highlights the importance of collaboration.
No company can really make it on their own in this industry.
It's all about those relationships.
With suppliers, distributors, other key players.
And in today's global economy,
those partnerships can span across continents.
Opening up a lot of possibilities.
Absolutely.
You know, it makes me think about the impact of those recent supply chain disruptions.
And all the geopolitical uncertainties.
Companies have to be really agile these days.
And strategic with their sourcing and production.
Well, Enel investing in that new facility in India?
Could be seen as a move to control their production more.
And maybe avoid some of those global supply chain risks.
Yeah, bringing things closer to home.
Taking more control.
It's a smart strategy in these uncertain times.
And that brings us to another key takeaway.
Financial strength.
Elin's net cash position gives them that freedom.
To invest even when things are a bit shaky.
They can weather the storm.
And focus on long-term goals.
So they're not just chasing quick profits.
They're building a foundation for sustainable growth.
And that's a lesson for any business, really.
Regardless of what industry you're in.
So for our listeners out there,
it's not just about understanding Elin's performance.
It's about those broader business lessons.
Adaptability, strategic thinking, financial smarts.
It's a complex world out there.
Absolutely.
And those are some important things to keep in mind.
No matter what your goals are.
Now, remember how Elin is betting on those high-growth products?
The oil-filled radiators, OTGs, those TPW fans.
What do you think those choices tell us?
About the Indian consumer market.
And how Elin is positioning themselves.
I think it gives us a glimpse into the future.
Of consumer trends, technology, even social and cultural shifts.
It's a fascinating window into that world.
For example, those oil-filled radiators could mean
people are looking for energy-efficient heating.
Maybe because of climate change or rising energy costs.
And those OTGs, those oven toaster grillers,
could point to smaller households.
People want appliances that save space and do multiple things.
And those energy-saving TPW fans
could reflect a growing awareness of sustainability.
So each product choice
tells a little story
about what consumers want and need.
It's a puzzle.
And we're putting the pieces together
to see what picture emerges.
A picture of a dynamic and ever-changing market.
Which is what makes this deep dive so interesting.
We're not just looking at numbers.
We're trying to understand the people behind those numbers.
Their motivations, their needs, their aspirations.
And that's what business is really about.
It's about adding value to people's lives.
Exactly.
So as we move forward,
keep an eye on those product choices.
Those strategic partnerships, those investments.
Not just random events.
They're pieces of a bigger puzzle.
A puzzle that can reveal
the future of technology and consumer behavior.
It's an exciting time to be watching this industry.
So stay curious.
Stay informed.
And keep exploring.
Absolutely.
All right, so we've really dug into Elin's performance this quarter.
Their strategy, their financials, those new products.
But let's boil it all down for our listener.
If they could only take away one thing from this deep dive,
what would it be?
Well, I think Elin's Q2 is a perfect example of how to navigate a complex market.
A market that's constantly changing.
It's about adapting, thinking strategically.
Being ready for anything.
Absolutely.
Now, as our listener continues to follow Elin,
what should they be watching for in the coming quarters?
What are those key factors that will determine their success?
Those new partnerships are definitely something to watch.
Especially with them looking for new customers.
To replace that, Signify business.
The success of those deals
will have a big impact on the revenue.
It's all about building those strong relationships.
It's a high-stakes game,
And the outcome of those negotiations could be a game changer.
for better or worse.
And then there's the performance of those new products.
Those trimmers, kettles, the radiators,
All those new appliances.
they need to resonate with consumers.
They need to sell. It all comes down to those consumer trends we talked about.
If Elin has read those trends correctly,
Those products could be a huge success.
but if they miss the mark,
It could lead to problems.
excess inventory, lower profits,
It's a balancing act.
anticipating demand while also managing production.
And then there are those external factors.
The things that are outside of Aslan's control,
The economy, inflation,
geopolitical risks.
all of those can have an impact.
It's a reminder that business is unpredictable.
And that's why adaptability is so important.
Being able to adjust to those unexpected changes.
You ride those waves.
That's what will separate the winners from the losers.
So as we wrap up,
What's that final message for our listener?
I think Elin's story is a lesson for all of us.
It's about strategic thinking,
Adaptability
embracing the unknown,
in a world that's constantly changing.
those who can anticipate and adapt.
Those are the ones who will succeed. We've given our listener a lot to think about.
A framework for understanding the business world.
And with that knowledge,
They can make better decisions.
whether they're investors
Young entrepreneurs.
or just curious individuals. So thank you for joining us on this deep dive.
Into Elin Electronics Q2 performance.
We hope you found it insightful
And we hope it sparked your curiosity.
about the world of business and finance.
Remember,
The journey of learning never ends.
stay curious, stay informed.
And keep exploring.
Until next time.